Hey traders, Shane from Global Market Trader. Hope you're having a great day. We're going to take you through some training here on the V2 Trend Trader setup. So the first thing we're looking for is the buy setup. We're looking for the buy setup, entry and stop. So what we're going to do now is just take the conditions for the buy setup. So the first thing we need to do is that price needs to break resistance and close above resistance, and we need to see our cyan candles or price bars confirm potential buy setup. So let's go and have a look at and see how that actually looks on our charts. Okay traders, so I've pulled up an 89 tick chart on crude oil. Now you can set the tick charts to whatever setting you prefer, if it's 55, 89, 144. So we've got a list of recommended settings there that we've already had a look at, and as I said, I generally tend to like trading the 89 tick. The time of the day trading will be provided in your training manual. So let's have a look at the buy setup. So a buy, remember that our requirements for a buy setup is that we need to see a buy on a close of a candle or price bar above resistance. So this red line here is our resistance line. So we need to see price close above that, and you'll see that first candle there. I've marked it up. I'll just widen this out a little bit. That confirms that there's actually a close above that resistance level. So traders, you'll see here that the high of that candle there is 88.61. So what I typically do, now you've got two options on entry. You can either take the trade once you see the candle close, so go straight in on the trade, or the other option, which is what I tend to do, is to work my entry at one point above the setup candle. So that first candle, the cyan candle, that's our setup candle or setup bar, depending on whether you've got price bars or you're using candles. So mine usually is a 1 point breakout above, and the initial stop, so our initial stop on the trade, our initial stop is the TP, so we call that our trailing profit. So it's 88.47, so that's the initial stop, and you'll see it basically on the chart as a dashed line. Now very occasionally the initial stop won't be printed because you'll have previous levels of support there. So what you can do is you can either use the initial stop. If that doesn't print up and you've got support clearly there, then you just use that support level as your initial stop. So either way, when you go into the market, you're wanting to have it's critical that you've got an initial stop, which is your starting point for the trade. So at least if the trade sets up and goes directly against you, you've got that stop in place, and that's critical for when you go into the market. So you need to determine where that stop is, and clearly on the chart you'll see it as a small dashed line, or you'll see it as a solid or a thicker green dashed line. So it'll either be here or your previous level of support. That'll be your initial stop. And then as you can see here, as price starts to move in our direction, so we get a little bit of a retracement, price pulls back, and when you're doing your testing on the strategy and you're logging your trades, it's always good to identify how far back each trade retraces before it starts to move in your direction, because that's critical information that we want to have as part of our trading. That retracement, we want to at least be able to determine what is our optimal stop, because we've set this trend trader strategy up so it has an initial stop which is a trailing stop. And what I usually do is there's our initial stop at 88.47. Now what I tend to do is I tend to give myself about 2 points on the initial stop, so I'll move it down to 88.45 on my platform. Now that's just through the testing I've done. So what you'll find is that people will have variations to that. So this is the great thing about the strategy, is that you can modify the stop depending on where your comfort level and your risk level is. So you might find that you want to use a tighter stop and have, say, a +5 above the actual trailing stop. So you might put it up here at, say, 88.49, just below the key level. Other traders might want to have just a slightly bigger stop, and they might work at a couple of points below, 3 or 4 points below. So that really comes back to your level of acceptable risk on each trade, and what's going to suit your trading style and your risk management. So again, as we said before, the initial trade sets up, it's a buy, that's the cyan candle. Our initial stop will either be the TP, which is our initial stop, or you can use previous level of support. So you've got two options there. And then as the trade moves in your direction, you can see that the stop starts to trail along behind the trade, which is perfect. That's exactly what we want. And you see that we start to move in the direction. Once we take a little bit of heat on the trade, we then start to see price just makes up. So price pulls back, makes a higher low from this area here, and we start to get some transition into our trade and move higher. So as you can see, we're moving up, and depending on where you've decided that your level of your stop level is, it might be right on this trailing profit that we've got, or it could be a couple of points below, as I've got mine. Then you see another level of support set up here, and eventually this trade, so let's have a look at where the trade went in. So we actually bought into this trade. My entry would have been entry at, and we'll put that in 88.61, because remember I was looking for a 1 point breakout. So let's have a look at how the trade played out. So we don't get knocked out here, we're giving it enough room, it's still pushing up, it comes up against that level of resistance there, it still doesn't get knocked out, we're still in the trade, this is a massive trade. And depending on if you decided that you wanted to work a tighter stop, you may have gone out at 89.26. So let's assume that you got knocked out at 89.26. So we exit, so we're out 89.26. So just before I go back over that trade, one thing I want to mention here, which we're going to highlight in the training over and over again and in the live training room, is that this reward to risk concept that we're very big on here, is that we're always looking to have a 2 to 1 or better reward to risk. Remember, we want to maintain a positive expectancy on our trading. So every time we go into a trade, our expectation is that we're going to be looking to make more, at least twice as much as we potentially could lose on the trade. And that way we're going to maintain a positive expectancy when we're trading. Now, what we don't want to get into a situation is making sure that what we want to specifically avoid is taking small profits and having larger losses. So that's definitely not the way we trade, and I just want to continue to reinforce that with our training videos. So as I mentioned before, the initial stop is 88.47. You can move that out to, you could use previous support as your initial stop, or it may be a level below this area here. So if you had your initial stop at 47 and had a 14 point stop on the trade, your minimum target should be between 25 and 28 points. So if you're deciding to go for a fixed target, now we need to remember here that this strategy is the GMT V2 trend trader. So the concept of a trend is that we're looking to ride this trade as long and as hard as we can. So we don't want to be just taking a small 10-14 point profit. And you'll see from the move here that you would have grossly missed out on substantial amount of money by taking a small profit of 10 or 14 or 20 points just to lock in the trade. So ideally we're going to want to ride the trade until the market takes us out, which happens up here at 89.26. So traders, that leaves us with a profit of $650. Now A couple of key points to remember here so traders, we need to have the same stop strategy or trade exit every time we trade. So we want to making sure that we're consistent there. We might test up a couple of variations, but once we confirm our trade plan, we need to be consistent as we move forward. So if you're using a 2-point trailing stop behind the trailing profit line, which is this dashed line here, that needs to be happening every time you trade. Your targets need to be 2 to 1 on your reward to risk, so you want to be rewarded twice as much as your risk every time you trade, or better. So remember, this is a trend trader, so you're trying to capture the trend. Now, locking in a 14 or 20 point profit is not locking in the trend and riding that as hard as you can. So don't take small profits. That's one of the key things. So we want to maintain a positive expectancy. So traders, that's the first training video that we're putting to. That's our first look at the trend trader. That's a buy setup. So again, thank you for your time, and we'll have a look at another example shortly.